What if I told you there's an AI stock trading around $5 that some insiders believe could ride the next trillion-dollar AI wave? Not Nvidia. Not Microsoft. Not Google. But a tiny company most investors have never even heard of. And here's the crazy part. While retail investors are chasing billion-dollar tech giants, some institutional money is quietly positioning for the next phase of the AI revolution. So the question is this $5 AI stock the next massive opportunity? Or just another market trap? Let's break it down. Because the real story behind this company is much bigger than you think. Context: the global AI arms race. Right now the world is in the middle of the biggest technological arms race since the internet. Artificial intelligence. Countries are pouring hundreds of billions into AI infrastructure. The United States is racing to dominate AI chips and software. China is building massive AI data centers to challenge American tech power. Europe is trying to regulate AI before it becomes uncontrollable. And corporations? They're spending like never before. Companies like Nvidia, Microsoft, and Amazon are investing tens of billions into AI systems. But here's what nobody is talking about. The biggest profits in technological revolutions rarely go only to the obvious giants. Think about the internet boom. Everyone remembers Amazon and Google. But some of the biggest returns came from smaller companies that provided the hidden infrastructure. Companies that built the tools, the hardware, the data systems, the pipelines behind the scenes. And today, AI is creating the same kind of hidden opportunity. If you look closely at the AI boom, something interesting appears. The biggest tech companies are spending insane amounts of money building AI models. But those models need three things to survive: massive computing power, massive energy, and massive data infrastructure. Without these three things, AI simply doesn't work. And that's where smaller companies suddenly become extremely valuable. Because some of them are quietly building the backbone of the AI economy. And one of those companies is trading around just a few dollars per share. But before we talk about the opportunity, there's something you need to understand first. Because the global AI race isn't just about technology anymore. It's about geopolitics. The hidden political story. In 2022 and 2023, the United States made a bold move. It restricted the export of advanced AI chips to China. The goal was simple: slow down China's ability to build powerful AI systems. But the move had an unintended consequence. China immediately accelerated its own domestic AI industry. New chip companies started appearing. New AI infrastructure firms began raising billions. Governments started funding AI startups directly. Suddenly, the AI war became global. And when governments start competing at that level, money flows everywhere. Not just to big tech, but to smaller companies building the tools everyone needs. And this is exactly where some analysts believe the next big opportunities could appear. Because the companies building the AI backbone today could become extremely valuable tomorrow. Now here's the part most investors miss. When Wall Street talks about AI, the conversation is usually about megacap stocks. Nvidia, Microsoft, Alphabet. But those companies are already massive. Their growth is incredible. But their size also limits how explosive their returns can be. A $2 trillion company doubling again is extremely difficult. But a $1 billion company? That's a completely different story. If a small AI infrastructure company suddenly becomes critical to the industry, its stock can move very fast. Sometimes 5x. Sometimes 10x. And occasionally even more. Now this doesn't happen often. But when it does, early investors see massive gains. And recently, some analysts started noticing something unusual. A small AI-related company trading around $5, showing signs of institutional accumulation. Which raises a very interesting question. Why would big investors quietly buy a tiny AI stock? Unless they believed something bigger was coming? The opportunity. Let's imagine a scenario. AI demand keeps exploding. Companies build more data centers, more AI models, more machine learning systems. But all of that infrastructure requires specialized components. Data processing tools, advanced networking, AI hardware integration, energy optimization systems. If a small company specializes in one of these critical areas and becomes essential to the AI ecosystem, its value could grow dramatically. Because suddenly, every major tech company might need its technology. This is exactly how many tech giants originally started. Small, unknown, ignored by most investors, until the market suddenly realized their importance. And when that realization happens, stocks can move very quickly. But before you rush to buy any cheap AI stock, there's a serious risk you need to understand. Here's the truth most YouTube videos won't tell you. Cheap stocks are cheap for a reason. Many small tech companies fail. Some run out of funding. Some never scale their technology. Some get crushed by competition. And others simply get ignored by the market. So price alone doesn't make something an opportunity. A $5 stock can easily become a $1 stock. Or even disappear completely. That's why smart investors don't chase hype. They look for real signals. Revenue growth. Institutional buying. Strategic partnerships. Technology advantages. And most importantly, they understand the broader trend. Right now that trend is simple. AI is not slowing down. Governments are funding it. Corporations are investing in it. And the global race for AI dominance is only getting started. Which means, some small companies in the AI ecosystem could become extremely valuable. But identifying them early requires careful research. Not blind speculation. Conclusion. The AI revolution is still in its early stages. And history shows that technological revolutions create two kinds of winners. The obvious giants. And the hidden infrastructure companies powering the system behind the scenes. Some of those companies are already worth hundreds of billions. But others are still flying under the radar, trading at just a few dollars per share. Now that doesn't guarantee massive gains. But it does create a fascinating possibility. Because sometimes, the biggest opportunities in the market are the ones almost nobody is paying attention to. And the real question investors should be asking right now is simple. Which small companies will quietly power the next decade of AI? Because the answer to that question could define the next generation of stock market winners. And if you want to stay ahead of global money moves, subscribe to the channel. The pattern most investors miss. Now here's where things start getting interesting. Because when analysts begin searching for the next breakout company, they rarely start with the headline names. Instead, they look for patterns. Patterns inside capital flows. Patterns inside government spending. And patterns inside technological bottlenecks. Right now, the biggest bottleneck in artificial intelligence is not software. It's infrastructure. AI models require enormous computing clusters, massive GPU networks, ultra-fast data pipelines, and massive energy consumption. In fact, a single advanced AI data center can use as much electricity as a small city. That means companies building the infrastructure around AI suddenly become extremely important. And some of those companies are surprisingly small. Why Wall Street watches small tech firms? Here's something most retail investors don't realize. Big institutions don't just buy companies that are already giants. They also look for future critical suppliers. These are companies that may look small today, but could become essential to a fast-growing industry tomorrow. And AI is creating hundreds of these potential suppliers. Companies building AI networking hardware, cooling systems for data centers, energy optimization platforms, AI server integration, specialized semiconductor tools. These businesses may not make headlines, but if they become necessary to the AI ecosystem, their growth can be explosive. Because every new data center, every new AI model, every new cloud platform needs those components. The $5 stock theory. Now imagine this scenario. A small company develops technology that solves a major AI bottleneck. Maybe it improves data center efficiency. Maybe it optimizes GPU networking. Or maybe it reduces the energy required to run AI models. Suddenly, major tech companies start paying attention. Partnerships begin forming. Revenue begins accelerating. And institutions start quietly accumulating shares before the broader market notices. This pattern has happened many times in technology history. Before becoming giants, many major tech companies spent years trading under $10. Sometimes under $5. Not because they lacked potential, but because the market hadn't realized their importance yet. And this is exactly the kind of situation some investors are searching for today. The AI money flood. Now let's zoom out for a moment. Because the amount of money entering artificial intelligence is almost unbelievable. Major tech companies are planning hundreds of billions in AI infrastructure spending over the next decade. Governments are funding national AI strategies. Startups are raising massive venture capital rounds. And cloud providers are racing to build the next generation of AI supercomputers. But here's the key insight. When massive capital floods into one industry, it doesn't just benefit the biggest companies. It spreads across the entire supply chain. Chip designers, hardware manufacturers, networking specialists, energy management companies, software optimization platforms. Every layer of the AI stack begins expanding. Which means opportunities appear everywhere. But only a few companies will capture the majority of that growth.